Hey there, entrepreneurs. Chad Pavel here, helping you as a self-employed entrepreneur make more money and save more money. Now, if you're self-employed, you've definitely had the question of how the heck do I pay taxes? How much do I pay? How do I file my tax return? How do I pay myself? What are all the different implications? And so in this video, I'm going to go through a step-by-step process of how taxes work for a Schedule C or self-employed earner. So I've actually created a little slideshow presentation of about 10 slides that'll walk through a couple of different tax return scenarios for a self-employed entrepreneur. So first things first, we need to make sure that you actually have a Schedule C and that you are self-employed by the definitions of the IRS. So the first thing is, do you actually earn income and do you receive a 1099? And that can be a 1099 from a freelance marketplace. It can be multiple different 1099s from different consulting clients that you've had. And it can be basically any company that pays you any money over $600 in a given year should technically be sending you a 1099. Any sole proprietor also receives income, but they may not receive a 1099. You still need to report that income as revenue on your tax return. And of course, if you've set up a single member LLC and you are receiving sales, then of course you still need to file a Schedule C and report your self-employment income. So all three of these scenarios, whether you receive a 1099 as an independent consultant, freelancer, independent contractor, whether you simply earn cash or receive cash or checks or wires or credit card payments from people or businesses or government agencies, even if you don't receive a 1099, you still need to file a Schedule C. And of course, if you set up a single member LLC and you get paid into that single member LLC, you definitely need to file a Schedule C tax return. So the next question is, what the heck is a Schedule C? I've said it about 10 times in this video, and so here's really what it is. So as a self-employed entrepreneur, that means you haven't set up a corporation, you don't have partners, you don't have a multi-member LLC, it's just you who owns 100% of the business. If that's the case, then you actually need to file with your individual tax return a separate schedule, and it's called a Schedule C. And the Schedule C is basically your tax basis profit and loss for the year. The purpose of it is to calculate your net income, which equates to your net taxable income that comes from your business and then flows onto your individual tax return. But wait, if you need a little bit more information on how taxes actually work as a self-employed professional, then here it is. First things first, the business itself doesn't pay tax to the federal or state government. You as a person will pay tax on all of the income that you earn yourself or with your spouse. And that includes all the different income that you can earn as a person, including interest, dividends, capital gains, Schedule C income, income from partnerships, income from other corporations. Basically, every single dollar of income that you collect as a person is what you'll ultimately pay tax on. Now, as a self-employed professional, you're going to pay two types of taxes on your income. First, you're going to pay an actual income tax. Again, the net income from the business flows into your individual tax return, which I'll show you in a minute, and you pay tax on that. Second, you actually pay what's called self-employment tax, which equates to about 15.3% of the net income of the business. Here's why that's the case. When you think about the days that you had a paycheck, remember, you had the federal and the state governments taking out taxes, withholding taxes from your paycheck, and they would send them straight to the governments. So they would actually go and do the work for you of taking taxes out of your income and sending it to the governments. As a self-employed professional, you don't have a W-2. You don't actually take a paycheck from a payroll company. You actually are responsible for sort of using this honor system of sending in estimated tax payments throughout the year, and then also paying or receiving any difference when you file your tax return at the end of the year. Another point to make is you actually don't pay any additional tax on distributions, or when you take money out of your business bank account and write it to your personal account, you actually don't pay additional tax on that. And I'll show you in a minute why that's the case. And in addition to making estimated taxes throughout the quarter, again, you only file one tax return, which is still your individual tax return. It's just that there's a separate schedule that I already showed you, which is called the Schedule C, or net income or loss from a business. And so one of the easiest ways to actually pay yourself as a self-employed professional is to do the following. Number one is to set up a business bank account. Number two, take all of your revenues and deposit it into that bank account and pay all of your business expenses out of that business bank account. What's left over is quite basically your net income or profit from the business in any given week, month, quarter, or year. And after a while, you're going to get a feel for how much money you're going to have in that bank account, how much profit you'll be able to pay yourself, and you can quite literally write yourself a check every week, every month, every quarter, and you're basically free to take out as much cash from your business bank account as you possibly can as a self-employed earner. You don't pay any additional tax on that cash that you take out. So now that we've gotten those topics out of the way, here's how a Schedule C actually works on your tax return. At the end of the year, here's what you're going to do. You're going to take your profit and loss from your accounting system like QuickBooks or Xero. If you don't use an accounting system, you're going to have to go and use your bank accounts to total up all of your cash receipts related to sales, all of your cash disbursements related to actual business expenses, and your revenue minus all of your expenses equals your net income or your taxable profit. And then you're going to input that information, your revenue, all of the various expenses into your Schedule C, which is again your net income and loss from a business schedule. Or you simply hand your profit and loss to your accountant and he or she will prepare your taxes for you. Here's a little more detail in how a Schedule C is actually prepared. After you enter all of the information about the business on top, including the EIN if you have one, or your Social Security, the business name, the address, and what the business does, you'll then enter the revenues, the cost of goods sold, and all the various expenses related to the business. So if you've kept really accurate financial records in QuickBooks or Xero, this will be really, really easy. If you haven't, you're probably going to have to spend a couple of days going through all of your records, going through your bank statements, and pulling out any personal and business expenses. It can just get really messy. So if you're having trouble keeping your business and your personal records separate, the easiest thing is to open up your business bank account, open up a QuickBooks or Xero account, and do all of your accounting regularly. So back to the point, what you need to do is record all of your revenues and all of your expenses. What are some really legitimate business expenses? Well, the IRS gives them to you right here, so it's kind of easy. All of your advertising, your car and truck, insurance, office, professional fees, fees you pay to attorneys, for software, to accountants, for utilities, actual legitimate business travel and business meals. Basically anything and every expense that's required or necessary and ordinary in the course of business for you to go and make a profit, you can include as a deduction on your business tax return. And after you have all of your revenues and all of your expenses totaled up, the difference, revenue minus all of your expenses, will be your net income. And that's ultimately what you pay tax. So in this scenario, we've created a business that has a $100,000 net income. And as you can see here, the net income of the business on the Schedule C actually flows directly onto page 1 of your tax return, which is your Form 1040, your individual tax return. So what do you actually pay tax on as an individual? So when you file your individual tax return, Form 1040, whether you're single, whether you're married, whether you're head of household, your income from your business, that $100,000 that you see down here, flows onto page 1 of your tax return. And in addition, you're going to pay tax on any W-2 wages that you or your spouse earned, any dividends, any interest, any capital gains, any other partnerships or business income that you receive. All of those things total up to your total taxable income. Then towards the bottom, you'll see a number of deductions, including a standard or itemized deduction. You also have a QBI deduction, which is your qualified business income deduction, which basically gives you a 20% deduction of your business income. You get that as a deduction on your personal tax return. It's pretty cool how that works. You'll also have some other taxes, including your self-employment tax, and any other credits or adjustments to your income will be included in lines 10 and below. And the ultimate result is that you'll have a bunch of income on top. You'll have hopefully some deductions and credits and adjustments below. And the resulting number of everything totaled up together is how much you and your spouse will pay tax on. So in summary, I hope this was helpful in helping you understand how you're going to pay taxes as a self-employed individual. Be sure to check out more videos where we talk about estimated taxes, we talk about the QBI deduction, and just general business deductions and strategies as well. Hit the subscribe button. We'll see you in the next video.